hundreds of US banks are at risk of failure. That's right, more than 60 of the largest banks in the US are at increased risk due to their commercial real estate exposures.
It says commercial real estate foreclosures soar to levels not seen in nearly a decade. Most recently, we're clocking in at 625 commercial foreclosures. Charles, that's a level that we haven't seen since roughly 2015.
Trillions of dollars of commercial property loans are coming due in the next few years. It's causing some pretty big concerns in the financial sector.
Bankers, finance specialists, and the stock market experts are withdrawing their money and investments because they predict that a banking crisis is going to happen soon. And according to them, this banking crisis will rival the Great Recession of 2008. With the very foundations of the US banking system under threat, the consequences are going to be catastrophic. So how did this happen? Is there any hidden threat behind this chaotic prediction? Banks are in trouble because they lent too much money. Many big banks in the US are in trouble because they lent a lot of money to people and companies to buy or build buildings. And now those loans might not get paid back. Clearly, this is a big problem that could severely impact the whole economy, making it harder for people to get loans, purchase homes, and even find jobs. But that's not all. To make things worse, almost 50 banks might go out of business in the next few years because it's getting more expensive for them to borrow money. Currently, they are having trouble running their businesses smoothly. When interest rates go up, it's like a double punch for them. They have to pay more to borrow money, but the people and companies they lent to might struggle to pay them back, which mean they could lose a lot of funds. This is a serious situation that could have far-reaching consequences and can lead to increased defaults, liquidity issues, and an overall lack of confidence in the banking system. Factors like rising interest rates or economic downturns can exacerbate these problems. It's crucial for banks to maintain healthy lending practices and adequate capital reserves to withstand potential shocks. Moreover, it will be affecting not just them, but also the general public who rely on them for financial services and the overall health of the economy. So which are these 50 banks? On top of the list, we have Flagstar Bank, Zions Bank Corporation, New York Community Bank, and then 47 other corporations. All these names loaned too much wealth within the last 3 years are now going to crash hard. But what about the lenders, the people who give money to these? And why is this not public news? The most suspicious thing about the coming bank crisis is that no news channel is covering this. These financial institutions are keeping it quiet, and the government is also turning a blind eye. Is the media too occupied with the latest scandals to notice, or is it purposely ignoring this predicament? After all, these organizations are the backbone of the US economy. If these fail, a great disaster will hit the US, leading to economic instability, employment challenges, displaced individuals experiencing homelessness, and eventually losing their life savings. Thus, while they are trying to stay afloat, it is only a matter of time before they sink. By downplaying concerns, they hope to prevent panic among customers, investors, and the market at large. This strategy can help avoid sudden withdrawals or loss of trust, which could exacerbate any financial troubles. However, this silence can backfire if the issues become public or if customers feel misled. In the long run, transparency and open communication are crucial for sustaining trust and stability in the banking sector. Silence on this turmoil will intensify the destabilization, leading to major political as well as monetary consequences, which will allow calls for regulatory reform or changes in leadership within these investment centers, impacting the broader financial landscape, further resulting in legal penalties or sanctions. Ultimately, this is causing serious operational issues as well. Even if only one bank falls, others will fall as well, because the economy will come crashing down. It will clearly illustrate a domino effect. Society will panic, the markets will plummet, and the government will be left struggling to pick up the pieces. This breakdown is going to happen, and that might be sooner than you expect. But what about the other banks? Those are not on the crisis list. Can you trust the other corporations with your money and the overall US economy? The whole banking system of US will face the shock. When the listed names start to fall, no other bank will be able to absorb the disturbance. The reason is the massive number of unrealized securities losses that have piled up. In fact, you should know that the staggering figure of $478 billion is equivalent to the GDP of a small country. This is how much they owe to their lenders. What do you think will happen when this huge amount of loss is realized? Clearly, the whole chain of the banking system will fall under the weight of this debt. Therefore, it's a worrying situation, especially when you consider the potential consequences of such a collapse. It's a situation that requires careful attention and swift action to prevent a potential disaster. Right now, many people are taking matters into their own hands. Some are choosing to pay cash for their homes, sacrificing their financial independence in the process. Others are trying to build up more assets so that they are not affected by the economic downfall. But both of these ways are not going to help adapt and survive. After all, this emergency cannot be dealt with now. No financial planning and diversification can help avoid it. Some economists are even saying that the time to have a solid plan in place is long gone.
The state and local governments have balanced budget requirements so they don't get unsustainable debt. I think that almost these requirements give people a false sense of security because the elected officials say year after year that the budget's balanced when they're using budgeting and accounting gimmicks to truly not balance the budget.
Higher interest rates are often seen as a way to control inflation and boost economic growth. But that's not all there is. Higher interest rates also have unintended consequences. For example, when interest rates rise, borrowing becomes more expensive. And when this happens, it gets harder for the businesses and individuals to pay back their loans. This difficulty or inability to pay back the higher interest rates is the main cause of this system failure. For instance, even if they borrow more money from foreign lenders, they would never be able to pay back the interest rate. So you can say that they are heading into an interest rate trap.
Now I owe under $10,000 for just my car payment, and it truly does weigh on me. It feels very challenging just on the day-to-day of, okay, well, I can start paying off towards my principal and pay off my car quicker, or I can, that wrestling of the question, or should I put that money into savings?
Moreover, the major profit for banks came from the real estate sector. But that was in the past. Now they cannot make the same profit from real estate. In fact, the value of property has plummeted badly. This is the main reason they are now left with worthless assets and poor financial records. According to economists, the commercial real estate market is one of the leading causes of the crisis that's about to hit the U.S. economy.
Every percentage increase in a mortgage rate significantly increases the monthly payment, especially for low and moderate income families. So there are good reasons in the broader economy for raising rates, but this isn't good news for those trying to purchase a home.
The banking predicament will spread like wildfire. Every sector of the U.S. commercial markets will take the impact. But what about people who have not borrowed any loans or have no real estate assets? The Americans will terribly be affected by this banking crisis. After all, the failure of the system will lead to the shutdown of businesses, thus leading to loss of jobs. The whole market will come crashing on the Americans. Even people who live in a self-sufficient way, such as farmers, will face the impact as there will be no markets to sell the farming produce. Therefore, countless families will be left without a steady income. Every other American will be struggling to make ends meet. Thus, it is evident that the consequences of this upcoming banking crisis will not just be economic, they will also be social and humanitarian. The impact on people's lives will be devastating. Undoubtedly, this critical period will lead to poverty, homelessness, and a decline in living standards. As unsettling as this thought is, there is no escape from the impact of this crisis now. While the upcoming catastrophe is horrifying to think about, looking back, it is clear that the organizations could have taken steps to prevent it. In fact, one key mistake was depending on the real estate assets alone as a form of investment. The one major rule of every business is to not put all the eggs in one basket. And the banks exactly did that. They put all their money on one bet, the commercial real estate sector. This is the main reason they are now so vulnerable to a downturn in the market. If they had spread their investments across different asset classes, there would be no disorganization to worry about. Or even if there was a crisis, they would have support from their other assets to bear the impact. Furthermore, they could have been more cautious in their lending practices. For instance, they should have loaned the money to people who were able to repay their loans. It would have reduced the risk of defaults and minimize the potential damage to their balance sheets. Another critical error was not having enough savings. No matter how small or simple a business is, it is the duty of the owner to save money for tough times. The bank owners had to do the same, but they did not. When the economy was booming, they should have set aside more funds to cover potential losses. This would have helped them bear the impact as well. But because they chose profits over precaution, now an obstacle looms on their heads. Guess they must be regretting paying out large dividends to shareholders and bonuses to executives. Now, there is nothing they can do to make sense of their finances. If they had taken a more responsible approach, they would be in a much stronger position to withstand the coming calamity. So is there absolutely no way to escape from this system disaster? Any silver lining, maybe? No. There's no escape from this coming banking crisis. Now, Americans can do nothing to escape from the impact of this unrest and disorder. However, they can do their part to make this less severe. For instance, the governments and regulators can step in to help. The banks can also take steps to fix their own problems. This can include things such as giving more cash, helping them get rid of bad loans, and making sure they have enough currency on hand. This way, the governments and these organizations can help prevent the condition from getting even worse. Furthermore, some individuals suggest that this emergency might even lead to some positive results. For example, well-capitalized banks, which demonstrate sound risk management practices with solid balance sheets, to buy weaker ones and set up of new companies with innovative ideas could be beneficial. The whole point being that banking crisis will not be simple, but citizens have gotten through worse times in the past. Surely, with time, patience, and hard work, Americans can get through this insolvency issue and have a stronger, more stable financial institution. Clearly, the road ahead will be extensive and challenging for Americans. But despite the uncertainty and fear that grips, there is hope. If governments, regulators, and banks work together to address the problems, take bold actions to stabilize the system, and prevent further breakdown, use this crisis as an opportunity to make meaningful reforms, then perhaps, just perhaps, Americans can deal with this disarray. Do you think this adversity of the banking structure will be the doom of the American economy, or do you think it will lead to a more stable, more resilient, and more equitable banking system? Let us know in the comments, and do share this video with friends and family.